Hello, everyone. I'm Bill Cannon, Head of Portfolio Management here at Valkyrie. And here is this week's macro summary. Recent economic data that correlates well as inflationary indicators suggest a pivot in pricing behavior is occurring. But it may be just a bit early with CPI and PPI to be released this week, along with the corporate earnings season about to start. Brent oil futures prices dropped briefly below $100 a barrel Wednesday before rising above the mark by the weekend. Price was around $114 a barrel during the holiday weekend before the decline. As a result of inventory growing at major consumer outlets like Target and Walmart, the Journal reported shipping freight rates are starting to decline, with contracts renegotiated and reduced about 20%, and expected to continue the trend in the near term. Friday's unemployment rate held steady at 3.6% from last month, while change in non-farm payrolls added 372,000 in jobs last month, demonstrating strength in the labor market despite the macro fundamentals weakening. CPI will be released this Wednesday, with the survey for the year-over-year coming in at 8.8%, slightly higher than last month's 8.6%. Core CPI, which excludes energy and food, looks to decline to 5.7% from 6% last month. Month over month, CPI looks to rise just slightly to 1.1% from 1%, with core declining to 0.5% from 0.6%. Fed fund futures are currently pricing in another 75 basis points at the next FOMC meeting, which would add to the 150 basis points already raised this year. For perspective, if 75 basis points is confirmed later this month, Fed fund futures suggest an additional 100 to 125 basis points to go, which would bring rates to the 3.5 to 4% target rate. The 2-year, 10-year Treasury yield spread has dropped below negative 8 basis points, one of the historically lowest points. The front end of the curve has risen about 20 points from last week. This type of indication would be viewed as a precursor to a recessionary period. The 10-year Treasury yield alone rose to about 3.1% Friday after a low of 2.75% reached Wednesday. Monday pushed the yield lower to the 3% level. The shortened week had equities trend higher, with the S&P 500 finishing the week at the 3,900 level, up from 3,750 Tuesday. Again, corporate earnings season starts today, so this story will certainly change by next week. Lots of data to process with investors hungry for more information. Until then, take care and see you in 7 days.